Right now, we've got ADP numbers out, and Steve Liesman has those. Let's get right over to Steve.
Becky, thanks. Just 99,000. ADP reporting that private payrolls for the month of August rose by just 99,000. That's against an estimate of 140,000. It's the lowest level reported by ADP since 2021. Goods sector up 27,000. Not really that bad for the goods sector, but service sector not doing its part, just up 72,000. All of this is against the payroll estimate for Friday of 161,000. We'll see how confident economists and forecasters are in that forecast as the day goes by. July was revised down by 11,000 to 111,000 from 122,000. Where were the jobs and where weren't they? Well, small business did not do very well in this month, down by 9,000. You can see right there. Medium okay at 68,000. Large businesses greater than 500 employees up by 42,000. By industry, there's education and health services at the top again, but not as strong as it's been. Construction, okay, 27, but in that goods sector, it was manufacturing that took off the 8,000. Financial activities, okay, but professional business services down by 16,000. Looking at this data on wage gains, unchanged at 4.8% year over year for job stayers, 7.3% for job changers. We don't know because we don't have the series going back pre-pandemic where the right level is. But it looks like we have, at least for a couple months here, bottomed out at this, what do you call it, relatively high, but much lower than it had been in terms of the wage gains that were out there. Becky, this adds to some concern out there about the economy from yesterday's Beige Book. They said consumer spending ticked down in most districts. Only 3 districts reported of the 12 districts of the Federal Reserve reported any increase in business activity. So there seems to be a gathering weakness here. How much deterioration? Well, we'll see at 8:30 with jobless claims, and again tomorrow in the BLS payroll report.
Steve, I think you hit the interesting point, how this is going to impact potentially people's estimates for what they're going to see tomorrow with that jobs number. You think automatically, is that what normally happens? If there's a stronger or weaker number, people adjust their numbers? There
are a lot of different attitudes out there about ADP. Some folks throw it out. Some people use it as an essential part of their forecasting. I did the math again. I do it every month. The absolute difference between ADP and the BLS private sector report has been 31,000 the past 3 months. So it has been close. It's been very wide in the past, the 3-month average, as much as 150,000. But it's been pretty close recently in the 30 to 50,000 range. So I would think it could influence to the downside a little bit out there, the expectations for the market.
Okay. Steve, thank you. Joining us right now to talk more about it is Nela Richardson. She's ADP's chief economist. And Nela, what do these numbers tell you?
Well, it tells me that after 2 years of outsized hiring and growth, we're finally seeing a normalization that's a little cooler than expected, cooler than average, slower hiring than we've seen in the past. And so taken together with other data, it's pointing to a softer labor market. We're not falling off a cliff. These are not job losses, but slower hiring, stable wage growth.
Why do you think small business seems to be feeling the brunt of this? That's where the declines came in, the job losses came in from small business.
Yeah, structurally, the economy's changed a lot over the last 4 years, and I think one of those notable changes have been the pickup in small business. Remember, new firm formation, business applications soared during the pandemic, and some of those were really viable small firms. About a third of them were what the census called high propensity employers, able to add headcount, but some of them weren't. And so I think part of this is you're seeing that structural shift, that some of these firms are new, and so they take longer to pick up steam and to hire. More importantly, also a lot of small firms are tied to leisure and hospitality, restaurants and bars that saw outsized hiring by the ADP numbers over the past 2 years, but that hiring has slowed. And so it's an industry effect and a structural effect that is really impairing some of that small firm hiring.
If you were on the Federal Reserve, what would you think this is an indication of a need for? Is it a need for a 25 basis point cut, a 50 basis point cut?
I don't think this jobs market actually points either way for the Federal Reserve that is looking at a cacophony of data. What I will point out, though, and I'm sure that the Federal Reserve members are attuned to this, is that it picks up on some trends of weakness that we saw before the pandemic, like manufacturing. Manufacturing was shedding jobs 6 months leading into the pandemic. And that trend was masked by all the changes we saw over the last 3 years. But when you look at it, we're picking back that trend of soft and weak manufacturing. So when I look at that 99,000 private sector, I say, hey, this is a pretty normal hiring market, except for manufacturing. That's the missing part. As the service sector is normalizing, manufacturing is just not a team player in this labor market.